So what should you be investing in, stocks or bonds? For most investors, the short answer is both. A better question is, what percentage of my portfolio should be in stocks versus bonds? This is a question about asset allocation and your risk tolerance. We will discuss both at length in later videos, but for now, let's discuss specific reasons why a stock or bond might be the more appropriate investment. Will Rogers, the famous satirist from the 20s and 30s, is reported to have said, "I'm not as concerned about the return on my money as I am the return of my money." Along that line, we say that you buy a stock or bond depending on when you need your money. Consider this scenario. You've saved up money to buy a car, but you won't make the purchase until a year from now. Should you invest these savings in the stock market for the next year in the hope of earning a 10 or 20% return? You could afford a much nicer car next year if you made an outstanding stock investment. But what if your stock investment loses 10 or 20%? Can you still buy that car? Will you postpone your purchase or settle for a lower quality car? Generally, for short-term needs, the risk of loss doesn't justify the possibility that you might earn a higher rate of return. This thinking should be applied to your retirement savings as well. If you need your money in the short term, buy bonds. If you don't need your money anytime soon, then buy stocks. How long is short term? Certainly 3 years or less. Some investors define short term as 5 years, or even 10 years. So does that mean if you're within 10 years of retirement, all of your portfolio should be in bonds? Remember that the money you have saved up by the year you retire is for a lifetime that could yet be another 10, 20, 30, or more years. With this in mind, some of your savings at retirement should be invested in stocks. This is a discussion we will have in later videos about asset allocation during retirement.